I've taken tens of thousands of trades over my last 7 years of full-time trading, most of which were taken live and recorded in front of hundreds of traders. In this video, I'm going to share with you the one simple scalping strategy I've mastered over the last 7 years. It's very beginner friendly, repeatable, and in this video, I'll share the full strategy along with the 3 entry models I use to execute it every single day. Then I'll show you live trades I took in real time so you can see the strategy being used in real time. So in this video, I'm going to explain my simple A+ scalping strategy that allowed me to have results like this. This was my first year as a profitable trader and I made over $180,000 in this year. Now it's important to mention I've been trading for 7 years, and even to get results like this, it took me 3 years of learning and perfecting my trading every single day to achieve these results. With this being said, the goal of today's video is I will teach you the one proven and simple strategy that I use to trade for about 90 minutes. And I will always mention that trading is not a get-rich-quick scheme. It takes years to become profitable. But the strategy that I'm going to show you today is the exact reason that I've been able to have consistent results in the market myself. For this strategy, all you need is one candle. That's it. Every day, all I use is one candle, and this one simple strategy helps me not only find my entry, profit target, and stop loss on a consistent basis and makes it very repeatable. And this way, I can eliminate the guesswork out of my trading. I don't have to hope that a trade wins when I'm in a trade anymore, and I don't have to use any complicated indicators or systems. Instead, all I use is one repeatable and mechanical strategy that uses 3 steps. And this strategy works for stocks, options, forex, futures, and crypto. So no matter what you trade, this strategy will show up. So how does a strategy work? Well, the strategy is called the one candle strategy, and all we have to do is mark out the first 5-minute candle of the day. Now, no matter what you're trading, the first 5-minute candle of the day is going to be based off the New York Stock Exchange. And therefore, we're going to mark out the first 5-minute candle that forms from 9:30 a.m. Eastern to 9:35 a.m. Eastern. And once we see that candle develop, we can now start using our 3-step profitable entry strategy. Really quickly, before we continue the video, I just want to remind you about the live 3-day trading event that I'll be hosting, where I'll be revealing my full system, the exact strategy and edge I've developed over the last 7 years that I've never shown on YouTube before, along with having 8-figure verified traders and guests that you most likely know, and they are highly respected in the trading industry, that will also be teaching live for absolutely free at my 3-day trading event. Remember, spots are limited, so make sure to sign up for the waitlist in the link in the description, and let's get right back into the video. So for step number 1, all we have to do is draw out the high and low of the first candle. Like I said, this is going to be the first 5-minute candle. So we're going to mark out the high and the low of the first 5-minute candle. Once we've done that, for step number 2, we will now wait for the stock to break out to one side. So as we can see here, we've already marked out the first 5-minute candle high and the first 5-minute candle low, and now we are looking for either a break to the upside or a break to the downside. This is very significant, and you have to wait for the break, because if we break above this high, this means that there is more demand than supply. When there is more demand than supply on a stock, this means that buyers are stepping up. And when buyers step up above a key level, this shows there's a higher probability that they are controlling the stock and it should move to the upside. Vice versa, when we break to the downside, this means that there is more supply than demand. And therefore, this is an indication for us to potentially sell the trade to the downside, as there is a higher likelihood chance of the trade continuing in that direction. And finally, for step 3, we simply want to enter on the pullback on the 1-minute time frame. As we can see here, this stock, we can see that buyers stepped up, and this means that there was more demand than supply, and therefore this stock moved to the upside. We had a candle closure above the 5-minute high, which is very important. And now all we would be doing is waiting for that retest entry back into this area, as this is where buyers need to hold the price for that move back to the upside. And it is that simple. Those are the 3 simple steps I use to trade this strategy. However, what are the entry confirmations that we can use? And that is what I will be talking about in today's video. So now that I've shown you how to use a 5-minute strategy, there's 3 different entry confirmations that we can use to enter the stock. There is either a breakout entry where we wait for the stock stock to break out above the 5-minute high and enter in without waiting for any sort of pullback. This is going to be our most aggressive entry, and this can only be done if the stock has a lot of buyers stepping up. And don't worry, I'm going to be showing you an example of all three of these different entry models. We then have the retest entry. This means that we waited for the 5-minute breakout. As we can see here, this is the same candle. However, we then waited for the stock to pull back into the 5-minute high, retest that level, and then move to the upside. This is going to be our highest probability trade along with the lowest risk, and this is what I personally prefer to trade on a consistent basis. And finally, we can also be looking for a reversal trade. Now, this could potentially happen if we break the 5-minute high. As we can see here, we then come back and break the 5-minute low. So we had fake out liquidity up here, and we actually enter the reversal 5-minute retest for a move back to the downside. Those are the three different ways that we can enter using these three different entry confirmations. And don't worry if you're confused about these entry confirmations, because now I'm going to show you all three of these entry models being used. I'm going to be using the first candle strategy for all of these examples. And of course, I'll be showing you real trading examples of the breakout, the retest, and reversal entry models, so you can see how I apply this in the real markets. Okay, so here we are on our first example. And as you can see, this is the first 5-minute candle that's formed. On the first 5-minute candle, we're going to mark out our high and we're going to mark out the low of the candle. Now we can go to the 1-minute time frame and look for an entry. On the 1-minute time frame, now all we're looking for is a break above or below the 5-minute range. It's very important to mention that I'm going to be showing you all three different entry models. However, for this first one, every single candle in the 1-minute time frame was green. This shows that on this specific day, this stock had a lot of relative strength, which means that buyers were very aggressive. And therefore, on a day like this, when you see every single 1-minute candle in the 5-minute range showing this much strength, these are the aggressive days that we can look for the breakout entry. Vice versa, if every single one of these candles was red, then we could have looked for a breakout entry on the 5-minute low. And this is a very important criteria for the breakout entry as it's the most aggressive. Let's see if we do break above this key level. Now we can see we're breaking above this key level, but when we broke above this key level, you can see the high of the 5-minute candle and the candle that is now closing, we have made a small little gap. And this gap here is called a bullish gap. This shows that buyers are very aggressive when it comes to breaking the stock to the upside. Now, the bullish gap is something that I can make a full video on. If you want me to make a video on the bullish gap, make sure to get this video to 5,000 likes, and in the comments down below, type bullish gap and let me know if you want a video on the bullish gaps. But with this being said, you have to understand this is a very bullish name for the day. So we can look to enter into Tesla here. In this example, we can put our stop loss at the break of the 5-minute low, and we can put our profit target at this 379 whole psychological number. This gives us around a 2-hour multiple where we're risking $1,600 for a gain of $2,600. Let's confirm this entry and see exactly what happens. And just like that, we can see we were able to capture this entire trade to the upside by marking out the first 5-minute high and the 5-minute low, waiting for the stock to break above with strong price action, looking for a move to the upside. Now, this is the exact same trade I took live in the Accelerator and Traders Lab, where I have been taking every single one of my trades for the last 1.5 years live in front of hundreds of traders. And the purpose of that is to show you that these strategies aren't theoretical. I really do use these strategies in real time, and this way traders can learn how I execute in real time. With this being said, this was the breakout entry and the most aggressive. Now let's go over to the second entry model. Okay, so here we are on our next example. We're going to mark out the 5-minute high and the 5-minute low. This is of course the 5-minute candle. And now from here, all we have to do is go over to the 1-minute time frame. On the 1-minute time frame here, we can see we actually got a bullish candle to start off the day, and then we got 4 down close candles. Therefore, because we didn't get all bullish or all bearish candles to start off this day, we know we cannot use the breakout entry model. Therefore, we will have to use the retest entry either above the 5-minute high or below the 5-minute low. Let's see which way this trade breaks out. And as we can see here, this trade is breaking to the downside, and therefore now what we're going to be looking for is a break below the retest of this previous 5-minute low for a move to brand new low of day, or at least that 2R multiple. So let's play out this trade and look for the retest. And right here, you can see we broke below. We're now coming for the retest, and this is weak price action. Buyers tried to bring the stock back above the 5-minute low. However, sellers stepped in, making this wick. Once again, if you don't know how to read price action, I made a full in-depth guide on how to read price action in a simplified way. So make sure to watch that video after you're done watching this video. But in this example here, we would be looking to go short on this trade. Our stop loss is going to be a break above the candle we enter in on, and we need at least a 2R multiple. In this example, our 2R multiple comes at low of day, and therefore we're risking about $710 for a $1,540 gain. Enter into the trade here, and let's see exactly what happens. And just like that, you can see we were able to enter on weak price action on the 5-minute low, and we were able to ride this trade all the way down into our profit target. Now, this was the retest entry. Let's go over to the final entry model, which is the reversal entry. Okay, so here we are on our last example. I marked out the 5-minute high and the 5-minute low. Let's go over to the 1-minute time frame. And on the 1-minute time frame, you can see we have down close candles in combination with up close candles on the 1-minute time frame. And therefore, so far on this day, we will be looking for a retest entry. So let's see if we get a potential retest entry. So we had some consolidation throughout the day, but we finally broke below the low of day level, or the 5-minute low. So what I want to see now, retest weak price action and then look for continuation to the downside. Let's see the price action we get when we come back into the 5-minute low. And as you can see, when we come back for the retest, buyers step up aggressively. We broke below, but there was no weak price action for us to enter. And on top of that, we've already seen that we were in the range throughout the day. So what this means to me is that this was fake out liquidity. And don't worry, I have a full video explaining fake out liquidity on my channel that you can watch after this video. But with this being said, this is now the scenario where you could look for a mean reversion trade. A mean reversion trade for the 5-minute setup simply means that instead of using the 5-minute low for a retest to the downside, we would use the 5-minute low for a retest back up into high of day, or we would use the 5-minute high as a retest down into low of day. So let's see if we can get a potential retest. And right here, you can see buyers stepped up, and now we are retesting that 5-minute low. In this scenario, we can look to buy the trade here. Our stop loss is going to be a break below this previous pivot structure, and our profit target is going to be high of day, which gives us about a 2R multiple. We're risking about $390 for $740 of gain. Let's enter into the trade here, and let's see exactly what happens. As you can see here, buyers stepped up off this reversal trade for a nice move back to the upside. Now, if you want me to make a video backtesting any of these entry models, may it be breakout, reversal, or the break-in retest over a 1-month period, make sure to let me know in the comments down below. And on top of that, if you're confused about any topic that I've talked about today, or you're an absolute beginner and want to start trading the right way, make sure to click the playlist on screen now. It is a full 10-hour plus guide with everything you need to know to start day trading the right way. If this video helped you, make sure to leave it a like. If you have any questions, put them in the comments down below. Subscribe to the channel, follow me on Instagram and Twitter for more education, and I will see you next week with a brand new video.